how to invest money in Malaysia and what is the best investment in Malaysia. Now, hi, this is CF Liu, independent financial advisor in Malaysia. Now, in this video, I want to help you discover what is the best investment approach you can use to invest money in Malaysia. A decision-making process I call as DIKW, which will always work regardless of your age or investing experience. Now, this framework will help you focus on what really matters. You just can ignore all the noise, or all the distraction, and could really help you answer some of the questions like, why am I not financially free yet? And why can't I retire early, among other things.
The DIKW framework stands for Data, Information, Knowledge, and Wisdom. Now, let's take stocks investing as an example. Your raw data refers to financial reports, like quarterly earnings, like annual reports, and also the price chart. But these raw numbers alone don't mean anything unless you know what certain financial metrics means, like PE ratio, earnings per share, dividend per share, liquidity ratio, free cash flow from fundamental analysis standpoint, and concepts like moving average, support and resistance line, transaction volume, etc. from a technical analysis perspective. All these are derived from raw data, and all this will then give knowledge in the form of context that you can make head and tail out of it. Whether a company's stock price is undervalued or overvalued, whether there's any growth prospects for the company, whether the company's business is resilient to market crash, crisis, or any downturn. But this knowledge alone won't make you any money. Otherwise, economics professor and PhD holder will be the richest in the world. Now, what really makes you money is that knowing to invest or buy in now or later. Similarly, if you are already invested, knowing when to sell is crucial. But you won't get this level from day one, because knowledge applied through trial and error over time will gain you wisdom. Now, heck, you even know that after gaining wisdom, you even know what are the stocks or sectors in Bursa Malaysia market or any market in the world to avoid in the first place. Which sector you have the skills and competency to have a bigger exposure into. Now, your exposure into how your portfolio is constructed will be different from the guy sitting next to you.
So you get to the point whereby your investment portfolio isn't really complex at all. Because end of the day, result is what matters. As in, how much is your net gain? Because you still win in the end. If you make money 60% of the time, but you lose money 40% of the time. It's all part and parcel of playing the investing game. Now, simplicity is the ultimate sophistication. Because it really does not matter if you win 99% of the time, but that 1%, your portfolio is structured in a way that 1% will wipe you out and you'll be back in square one. Because people generally fear of losing money, and they think that investing takes too much time and effort. They always try to look for what they think it's, look for miracles or a quick shortcut when it comes to how to invest money in Malaysia. So they end up using things that they thought are their miracles, like robo-advisor, because they think robo-advisor wants to lose money because, let's face it, right? They think, robo-advisor uses artificial intelligence or AI. Now, they thought that robo-advisor won't lose money even when the market is down, and that actually caught them by surprise, you see. Not because robo-advisor is no good, not because robo-advisor sucks, but because you just have to accept the fact that in investing, you lose money, at least on the paper. The only question is how much and when, and whether you actually realize that paper loss into actual losses. And part of that depends on your time being invested, because the winning strategy in any form of investing has always been time in the market instead of timing the market. Other thing about robo-advisor is that, robo-advisor could not really tell you or set the right expectation for you of what to expect, what are the kind of volatility or returns. And robo-advisor cannot help you understand that why you are doing this, to put everything in your own context. You can only do that for yourself, like relate what you are doing in your investing to your own personal situation or context, like end of the day what you want to achieve, by using this DIKW framework I just shared with you. You see, for robo-advisor, for a layman, this is like a black box. At the times where you invest into, robo-advisor, and then if you make money, you don't really question what is inside the black box. But then after you invest and you end up losing money, plus you do not really understand what is going on inside the black box, then naturally, as a human, you will panic and you pull out your money. And that is how you actually realize your paper losses due to short-term volatility, which is very natural when it comes to investing. But the bad thing is when this happens, your journey of learning how to invest money in Malaysia turns traumatic. And you are forever scarred. More so because you are not aware of this DIKW framework. But that being said, even robo-advisor has their own set of problems. For example, in the early 2020, some robo-advisor even closes down. Which is why in the long-going REIT method investing courses that I've been running since 2012, I cover this entire DIKW framework end to end. It isn't just any online course out there that you enroll. the online course, it comes with a one-on-one interaction. The online course doesn't just tell you, after you enroll, then you're on your own. I give you all the information that you need, all the important financial indicator, and to give all this data into meaning. Then you have the knowledge to decide, what REITs to actually invest in and what REITs to avoid, when and where, whether they are overvalued, whether they're undervalued, their growth prospect. It's just like, you are writing a Bahasa Melayu essay, what we call isi tersurat and isi tersirat. And this is one thing a lot of investors do not know. They are not even aware of how to invest money in Malaysia. Is that I teach you really how to look at the important elements of the economy that really matters and affects your investment return. Because if you don't understand economy, you don't understand investing. You don't understand business, you won't do well in investment. Business and economy are so intimately related, which is why a REIT method client like Mr. Tan, who's a former CFO of IBM Malaysia and an accountant in training, actually gave me testimonials like this in my LinkedIn. So now that, after going through up to this stage, you have the right context, and then you actually up level further by picking not only my brain, but a collective hive mind, which I've learned from other clients who have been there, done that. What works, what doesn't work. So you shorten your learning curve. You pay less tuition fees. Why? Because you lost less money or even minimum amount of money when you learn from the mistake of others instead of learning from your own mistakes. And now, up to this stage, it translates into wisdom. And I actually supercharge your wisdom game when you have this one-on-one session with me in the REIT method course, where I actually handhold you in the investment portfolio construction after understanding your unique circumstances in an Ask Me Anything transformation one-on-one conference call. People always ask me like, well, there's so many sectors in Bursa Malaysia or any stocks market in the world. Why, CFU, why are you only focusing on this one sector? Are you being too simple-minded, or you are being too simplistic? I say that because over the years, for more than a decade, I've tried almost everything else. And when I did really make 300-400% within weeks using complex financial instruments like put options, now I realized that it's really not sustainable considering so much effort on time that is being put in. You see, I make money here, I make money there, I lose money here and there. Now if I add that up together, really the net gain isn't really that much. But I've spent so much time and effort into it that I don't feel it's worth the time and effort. So for me, I have also been there and done that. And like I say, up to a point when I realized simplicity is the ultimate sophistication. So I'm not here to impress you with how complex my trading or investment strategy is, because this isn't like a school science project where you score the highest mark by being the most complex or advanced. Now, unlike other lessons you can find in YouTube on how to invest money in Malaysia, I've gone through some of it and they are mostly a fluff. I'm only here to show you what makes the boat goes faster, what really moves the needle. Say no to all these other distractions to your job or business, because the reality is about how to invest money is the fact that it doesn't mean that if you spend 10 times more time and effort into investing, you will get 10 times more the result. So you see, if I can make like a 6% per year, spending 30 minutes a week, versus I get a 10% per year, spending 4 hours every freaking day, I will easily decide to take the former option, right? Because the time that I spend, the excessive time that I spend unnecessarily on investing could be channeled to a better income generating activity or skills in my career or business. And then in turn, when you actually earn more from a career and business, that naturally gives you more money to invest. Because let's face it, if you are stuck in a low income job or skill that only enable you to save 10,000 per year, even 20% return out of 10,000 is only 2,000, versus someone who are in a high income job or even have a high income skill. Now this someone is able to save, say, 100,000 a year easily. Now 6% out of 100,000 a year is already like 6,000 compared to 2,000. That is like 3 times better, right? Now this is the reality of the 2-in-1 combo attack on how to invest money successfully. Get it? Now, likely something 6% is also safer and it's more consistent. It's not going to give you that kind of heart attack by suddenly losing like 20 or 30% in a year. Something that can swing 20% positive in a year is likely also to swing possibly like minus 20% in the following year. And human psychology tells us that people actually hate a lot more in losing 20% than gaining 20%, and that is called a loss aversion. So if you agree and can relate to what I just say, then you're going to love the content of this short ebook that I wrote previously. It's called the No BS Guide to do what you're good at, live the life you deserve, and enjoy the freedom you desire. Comments below, I want it, because this book will really challenge what you thought you know about money and investing. Now these are what readers are saying about this book. Now don't forget to also check out all the related lessons on how to invest money in Malaysia by clicking on the upper right hand corner after this video ends. It's a circle with an exclamation mark on it. Also, be sure to subscribe and like, because these are what other subscribers are saying about CFU YouTube channel.